Hello and welcome to the 13th episode of Your Money Life Coach with me, Barbara Mundell, right here on eRadio. This is your weekly Wednesday inspiration to act and manage your money better. Now, today we are talking all things credit score. What is a credit score? Why should you have one? And what factors impact your credit score? Let's dive right in. A credit score is a measure by credit bureaus and credit providers to check how reliable you are when it comes to repaying your debt. In other words, will you be repaying your monthly debt as and when you should, or will you be slack and miss a few months and not pay on time? Now, there are various factors that influences your credit score, and we'll get into them right now. What should I aim to have my credit score at? So a credit-worthy credit score, in other words, it will be favorable for creditors to look at you as a potential client, is anything in the region of 650 and upwards. You must also remember, the better your credit score is, the better interest rate you will get on your debt. So it's definitely worth your while to try and get that credit score as high as possible. Another very important factor that you should take into consideration is the fact that potential employers also look at your credit score. The reason for this is they consider people with a higher credit score as better employees. If you are worried about money, you are generally to have a lower level of productivity than your peers. So a credit score is a good measure for potential employers to determine how well you manage your money. Therefore, it's not only necessary for credit to have a good credit score, but it's also necessary if you want to land that dream job. Now, how should I manage my credit score and what should I do to get it as best as possible? The first factor that influences your credit score is the number or amount of credit that's available to you. So you might have credit cards or revolving credit facilities with high limits that you don't necessarily use. However, those amounts are available for you to use, and should you use all of them, your monthly repayments will increase significantly. This has to be taken into account. Remember, in terms of the National Credit Act, creditors have to look at you and assess your credit worthiness fairly. In other words, they have to make sure that you can, if you wish to use up all your credit available to you, still meet your monthly obligations. Now, another way in which you can reduce your credit score is when you're looking for credit, you apply with every single credit provider to see where you get the best deal. You will reduce your credit score, and remember, you want a really high credit score because that's better. If you look at the number of inquiries and how it impacts your credit score, it can have quite a significant impact. The reason for this is it potentially highlights that you are in financial distress and that you are looking to get credit wherever possible. Remember, if they all approve you, you have all that credit available to you, unless it's attached to an asset like vehicle finance or a property, then there's a different story because there's an asset linked to it. But if you are looking for unsecured credit, in other words, personal loans, credit cards, revolving facilities, overdrafts, things like that, try and keep your number of applications to the minimum. Ask the bank beforehand if they can give you an indication of your interest rates and what their monthly fees are. Now, the next factor, paying on time. Your statement due dates are incredibly important for you to take note of. If you have overdue accounts, it negatively impacts your credit score, even if you paid that credit. If you miss the due date of a payment by, let's say, 2 or 3 days, your payment will not reflect for that period. It will only reflect as you paid it for the following month. So it will thus negatively impact your credit score, as it will show as a payment that was not made on time. The next thing is, when you experience financial distress, always try and talk to your creditor and enter into an arrangement. It happens sometimes that we all find ourselves in a position that you are not able to meet your obligations. The sooner you speak to your credit provider so that they can make a plan for you, the less of the impact will be on your credit score. They might say, right, for this month we'll accept a lower payment, and when you make that lower payment, it will go through to the credit bureau and be reflected as a payment, even though you didn't pay the full monthly installment. There are many ways to manage your debts and make sure that you make those payments on time. Make sure that you have only the credit that you need available to you. And lastly, make sure that when you do those applications, you take into account every single thing. The more information and accurate information you provide on a credit application might just be the difference between an approve and a decline. Make sure that you only do the amount of applications that is totally necessary to avoid the future negative impact on your credit score. That's it for me today. Be sure to tune in next week, Wednesday at 3 o'clock, where we will have some more fantastic tips to help you manage your money better. Remember, this is available as a podcast that you can find on eRadio's website to share with your family and friends if you found this useful. You can find us on Facebook at Your Money Life Coach, or visit our website www.yourmoneylifecoach.co.za. I look forward to talking to you next week.